All right, so tonight's Dean's Huddle is really a bit of a quick update on what's kind of happening around the Graduate School of Business, and then we're going to dig into a couple of big industry trends. And so when Connor and I were thinking about what would kick off this year well, I've had the good fortune of speaking over the last year all over Portland and Maine with industry associations and CEO groups and the such, and I've been really doing this talk around mega trends. So there's a whole bunch of them that we talk about. Some have stopped, some have endured. So we'll pick a few of them because we like to keep these very quick, so everyone can get back to Sunday night football or whatever else you normally like to do on Sunday evenings. And so four of the key ones that we really think are going to endure, and we'll have a little bit of a conversation about those. So the Dean's Huddle is something that we're having 8 this year at least. We've got a series of speakers we're very excited about and trends that we're going to kind of go through, and we're really looking forward to it. And again, as Connor said before we started recording, this is our second annual season. So when an idea goes and then happens again, we're very excited. And as we kind of referred to a bit earlier, why do you do these things? As well, people really like them, and we get a lot of uptake in the days that follow from your fellow MBA classmates. As I mentioned, this is something that we've been paying really close attention to, like everybody has. And, when you're a dean of a business school, you get asked these things a lot. And I'm sure all of you are concerned and worried about this. I mean, the world is in its craziest state probably since 1946 when World War II ended, right? It is just bizarre with whether it's interest rates or inflation or changing demographics or people exiting the workforce. Some of the really interesting things that are kind of happening out there that are continuing now that COVID is largely in the rearview mirror is there's a huge exodus of people from the regular workforce. People are choosing to retire early, to consult from home, to if they're a couple, and so the whole value of driving money is different. So these really, really interesting cohort shifts coming along between the way a millennial or a Gen Z views the world versus a Gen X like me or a boomer who are dominating kind of the senior positions in the workforce today. And so there's all of these interesting things happening. Real estate, I mean, it's a crazy world out there. I mean, every day, I don't know if you're investors, if you have pension funds and these kind of things, but I mean, I get letters saying, the value of this portfolio went down 40% today. And then the next day it went up 17%. And like, if you panicked on any of these things, it would be a disaster. So it's a really volatile, crazy time that's full of high risk, but also high opportunity for organizations and people, whether you're doing it for your organization or doing it for yourself, as a lot of you know. And if any of you done our finance courses with professors like Pank, you're really on top of a lot of these kind of things that can, with some smart decisions, can make you or your enterprise really, really successful and kind of mitigate some of these risks. So it's a crazy, crazy time out there right now. And so we wanted to dig in on a few of these things that people are really kind of uncertain about and kind of going forward, and happy to talk about a number of others because I've done these talks with up to 25 different trends, but that takes a whole morning. We're just trying to get through a couple in the next 10 minutes or so. So the first one is this notion of home. And I don't know about the rest of you guys live in a variety of parts of the world, and we have MBA students in 35 states and more than 15 countries. So when people watch it, they're in a variety of different contexts. And I've recently been traveling. I've been to New York recently. I've been to Chicago. I've been to Toronto. I was just in Ottawa. And it's really interesting, cities that I know very, very well. And you go for your morning run downtown, and it's like you might see one other runner. Like nobody's there. It's a very different time. You're out in New York City on a Thursday night, and it's busy, but not like it was before. And there's people are out there doing things, they're traveling, they're spending, the airlines are full, the tourism industry is struggling, but this whole idea of people going to work. So a lot of organizations, in Portland, there's a few restaurants that I just know about that have closed in the last couple of weeks simply because they were designed for the lunchtime corporate crowd, and they're just not there. Like their people are coming in 1 or 2 days a week and all this kind of stuff. So what's going on out there? Well, there's some organizations and agencies, and you can Google and find lots of these results. Here's just one example, but there's a bunch of them. This one seemed to be pretty good, and they're all in this kind of neighborhood. So when you go back to 2019 in the United States, about 1 in 10 people were working remotely. Some of you might have been those people. We all got colleagues that, either they were consultants or they might have been accountants or they had a specialized job with the government and they've been working remotely for many years. That's existed, but it was 1 in 10. So relatively modest. And usually they had a special situation or a job they didn't need to connect or be at meetings. Then we went during the height of the pandemic to just under 60%. So 6 in 10 Americans were working from home. And if you remove like those people like firefighters or technicians who actually have to work on a specific product, or a police officer, or et cetera, like there's a number of jobs where it's just impossible to work from home. You're talking about almost everybody that was in some kind of job where that was possible. And now the forecast is it's people are coming back in a variety of different ways, but it's going to net out somewhere around a third. Some other studies, so 40%. This one was 36.5%. That's a huge shift. If you consider 250 million working people in the country, plus or minus, and you say, well, 25% of those, which would be, well, you do your math, 62.5 million people have now shifted from an in-person to an online work environment. How many organizations does that impact? Enormous, right? Some positive, some negative. So we're really seeing this interesting kind of dynamic kind of go forward. And then if you dig a little bit deeper, very few of those in-person people are going back in a nature where they're going in 5 days a week from 9 to 5. If otherwise they're losing people, and so people are flipping different things. I've talked, like probably a lot of you have, to a number of companies. So some have gone to things like, we let people choose. So you choose right away, are you going to come in regularly, occasionally, or not at all? If you click not at all, you lose your office, you lose your rights, blah, 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 but you can do what you want. If you're regularly, you're expected for 3, 4 times, 5 times a week. Irregularly, you might share an office. You might have a virtual workstation. You might have whatever. And so there's all of these different models, and everyone you talk to is trying different things. And if employees in the current environment aren't happy with it, they tend to just quit. So it's really challenging from a management perspective to survive in this. So that's the first one that's really out there, and really you got to kind of park in your back pocket that we're going back a little bit, but nowhere near to the way it was. And so this trend was probably happening, but it just got, most people think it got accelerated about 10 years by the pandemic. So that's kind of an interesting one. The second one, and there's lots of ways to look at this, and I'm going to kind of spin it in a different way. It's more of an example of the trend, but it's this idea of digital money or digital value of things. So that image you see on the right of LeBron James dunking over top of a 7-foot center has been purchased by someone. So someone has bought this for $55 million, whatever the number was, and they own that image. Like, well, why the hell cares? I can Google that. I can find it on YouTube. I can search it wherever I want. Well, it's on the idea that they want it. They want that posterity, but also at some point down the road, we will have these tokens. So you see that non-fungible token, and I put the definition up there. You can read it so you know exactly what these are. It's just one example, but that will become like a unique value, like buying a piece of art, or like buying a technology or a patent. Down the list you go, but it will have a specific value. And very wealthy people or investment organizations or syndicates are investing in these things, somewhat because they love this particular player, but mostly because they believe it's going to be worth something someday. Aaron Judge, when he hits his 61st homer, and maybe he's done that already if I wasn't paying attention tonight, that will be recorded. Think about Serena Williams' retirement. That could be recorded. Roger Federer, just his game on Friday night. You think about a musician doing something special in a concert. Someone could own that. And so this is just an example of this whole thing of like, well, when are we going to have digital money? Like that all money will be just digital, and there won't need to be this paper coin, metal version of it. Well, it's not a matter of if, it's a matter of when organizations adopt into this. So it's a very interesting, scary, challenging thing when you think about how you want to be paid, what you want them to be, and how are you going to invest. And so this whole notion of things that are unique and digital that someone could own is really considered a future source of significant investment and probably significant revenue generation opportunities for individuals and businesses going forward. So if you haven't thought much about this, and most people haven't, time to, and get ready for it. If your organization's not thinking about it, particularly if you're a global organization, it's definitely time to get ready for that. This one I love. I searched everywhere for a newer graphic, and I'll give you the updated data, but there's not one that's kind of out there. And this to me is just probably the most important thing, and the huge shifts that are out there. So if you take this, so the most common age of a Caucasian or white person in the United States right now is 61, right? So you take the thing there. If you look at Hispanic, it's 14. If you look at a Black American, it's 30. An Asian American, it's 32. So if you look at those kind of particular groups, go, wow. So what's kind of going on within this group? So we've got this, and then you layer on top of that the generations and add to that, because this is 3 years old. So you can do the ranges are a little bit different. So Gen Z now goes up to about 23, 24, depending what when you look at. Millennials are now pushing 40. Some people say they're a little more than 40. Gen Xers, my age, are up to 55. And then you've got the boomers kind of at the top end. And so they're dominating the workforce still between 55 and late 60s. And the largest group of them will be retiring in about 4 years. So there's going to be this. So we've already seen this exit from the workforce that's significant. And some have gone early, as we mentioned earlier, because of the kind of the COVID pandemic. I don't want to work so hard anymore kind of thing. But also we're going to have this massive, they're all going to hit 64, 65 in the next 5 years. And so there's going to be this huge exodus of largely white, but the largest proportion of the workforce are exiting. And then these other groups, which are very different, coming along. And in some of these talks, I show these little kind of humoristic things where, you get a 67-year-old boss who's a boomer saying, well, I'd like to meet you for 1 hour every morning to talk about your day. And then you put the bubble ahead of the 24-year-old Gen Z. Like, can't you just snap me? And you got everything in between, right? Like, so there's these styles of interaction and people that are just completely totally on the different page. And I'm in a generation that's in between. So some of us are a little more modern or less modern, but the boomer versus the millennial and the Gen Zer is this massive gap. That's a huge challenging. Then you layer on top of that race and cultural backgrounds. You can layer on that as well gender backgrounds. Think about women versus men, now other genders, and that whole conversation is kind of growing. It's really, really, really challenging. And that's the last point there on the left, as a manager practically in the day-to-day environment. So what do you do with technology? Great example that I can tell you from my life, right? Like I'm the one dean at the university who's running a largely, we're a virtual, somewhat in-person, hybrid, interactive environment, right? And then you've got other parts of the university saying, oh, we don't do meetings with Zoom anymore. And you're like, what? Like, so you got this gap that's so far apart. And how do people function? How do you choose? And how old are they? Like, people are really, really struggling with this. And then you've got, high-tech agencies that had already done this before. And they're saying, well, why do you need to have an office? Why do you need to do this? Why do we need to communicate in these long sessions and people have to drive to go places? There's just great technology out there. Part of that is having the technological capacity, but part of that is also understanding the differences between these cohorts and how significant they are. And you can make the same argument with brands as you do with technology, or how people interact or what's important to them. A great example is the value of money. So boomers came from this glorious time. Their parents were Scrooges, right? So the lost generation that lived through the world wars and the depressions, like they would have, in their basement stacks of food. So just in case another war started. And the boomers all of a sudden had all this money. They've had this glorious life. And now they're kind of coming to the end and they care about their kids. And so money was really an easy thing. And then I grew up in a generation, Gen X, where you couldn't even get a job when you finished school and everything. So we're like total, and you would never quit a job till you get a job, and you never take another job unless it paid you more money. And then behind me is a lot of you, the millennials and the Gen Zers, are like, well, you know what? Money's not that important. I care about the planet. I want a job that I like. And like, there's these a lot of these anecdotes about quitting. And like when a millennial will go to their boomer boss and say, well, you know what? I'm done. I'm out. I'm going to quit in 2 weeks. It's just not for me. And the boomer go, well, what did I do wrong? Hey, no, man, you're cool. You're a great boss. I like you. This is not my jive. I want to do something else. Well, do you have another job? Did someone hire you? No, I'll find something. I'm not worried about it. Like, this kind of a huge difference in how people view things is very, very, very challenging. So this has emerged and been emphasized. So you need to be very, very aware of that. And then the last one, and then we'll open it up for discussion. And this is one that is really, I mean, emerged. I think it was emerging, but it's really become evident in the pandemic and how we want to do things afterwards. And you think about the old ways for those that are a bit older of buying a car or buying a house or dealing with your bank. So this whole notion of presence-free living. And these are a couple of Super Bowl ads from last winter. And I don't know if you watched them, and it really struck me of how much money these organizations were spending in like the best marketing platform we have in the country to try to get these products out there that are really based on this notion of you don't have to go anywhere to buy a car. You don't have to go anywhere to make an investment. You don't have to go anywhere to buy a house. You don't have to go anywhere to get a mortgage. And that is for the younger populations, that's emerging so much. People don't want to go places. They don't want to go somewhere and negotiate. They want it to be easy and fast and come to my door. And so it's really evolved more beyond a lot of other things. So this is more of one that, like, if you're entrepreneurial, this is where opportunities really, really can come. And you can go down the list of like Airbnbs and Amazon and Uber, et cetera, as initial kind of thoughts of how do we transform some industries into this very simple way of doing it. But now it's much more like, wouldn't you like to pick the car you want and have someone just bring it to your front door, not have to lose a day of your life dealing with a car dealership? Yeah, most people would. So you get this kind of thing that's really kind of come forward. So those are the four that we wanted to talk about. And I would be happy now to take comments from anybody, and we can talk about any of those four or other things. And the kind of things we really wanted to flag that you should keep your attention on and your finger on kind of as we go forward, whether it's for your organization, your own professional development, entrepreneurial things you're thinking of doing, your own personal investments. It is a crazy time out there. And voila. So happy to open it up to discussion. And O'Connor, if there's anything I've missed or you want to add.
Start off the questions, because I definitely have one on that last point that you just brought up. I can't help it. I'm in a supply chain class right now. And so when I hear you talk about like localization of, not having to go anywhere for something, I can't help but think about like, I mean, who knows, but like what that's going to do for constraints as far as like supply chain. I'm not sure if you've noticed, but my Amazon free shipping with Prime has definitely slowed down over the past few months. It used to be able to get 2-day shipping. Now it's pick your Prime day and it comes once a week. I can't help but imagine that has some sort of cause and effect from people, like you said, shifting to working at home more and just people wanting more things delivered without having to leave their houses. So just interested to know if you've read anything about that or in your studies and whatnot.
Yeah, great. It's a great question. I've followed very closely. And what the kind of the general thought out there, or the finding out there right now, is that it really depends on the industry. So one example of is kind of the housing, kitchen, housing got so far behind. Well, that industry now has caught up. And so all of a sudden you've gone from like this, if you want to get, some renovation done in your house, it was this huge wait. Well, now they've figured it out. They've staffed up. They've paid people more. They've figured out supply chain issues. There's things being constructed more domestically than internationally. They've moved around to avoid certain international problems with supply chain, for instance, with the war in Russia and Ukraine. And so that's a great example of one that's really caught up. Petroleum, as you know, is doing okay. If you go to the gas station, it's come down a little bit, but all of us have just been horrified. They haven't quite got it figured out yet. And so it really is an industry-specific kind of thing when you look at it. The other variable that's really important there is the type of market that you're in. So now that this, the whole country was just booming, and any G20 really, and now that's really slowed down with this interest rate push. So we all knew this was coming, right? So you have this huge stimulus package comes in. It's economics 101. This huge stimulus package came in, all this money flooded in. People had piles of extra cash, right? So that was good. Some people needed it, some people didn't. Well, that led to more spending, which what everybody wanted to keep the economy going. And so that led to these supply chain issues that you mentioned, Connor, right? So, but what do we all know what happens when you put a huge pile of new money into an economy? Well, it's going to grow, and eventually it's going to find equilibrium and recess. And so that's coming. How big is it going to be? That's the big question mark, and nobody knows. There's going to be a huge recession, a little blip. And so now we're seeing the first, because inflation cranks up, because of course you threw all this new money and we had to. It was first Trump and then Biden. You had to. The right thing to do, keep the economy going, keep people working in this really tough time, help businesses survive. And now it kind of flips back. And so then interest rates have to come up because we can't survive in an inflation, driven world. It's just horrible for everybody, but especially those in the lower or the middle classes that are any kind of tight budget. And so now we see the interest rates cranking up. So the real estate market's slowing down, but mostly in those areas where there's less demand and for younger people who just can't now get approved or take the risk of those higher interest rates. But the areas that are booming, like Portland, Maine, not much has changed. And for those that are not really needing to borrow that much money or concerned about a modest shift in their payments, it's not nearly as bad. So it's really impacting the different classes. And then how are those different industries responding? So that's the two things. It's industry specific. And then where do you kind of fit in this overall shifting trend, and how do people feel about it? So some are investing like crazy in this market, and other people are just slowing down because they're terrified about these high interest rates. Some people think costs of things will come back down. It's a really interesting time. That's a bit of a non-answer with a bunch of factors, but it's getting better in some industries, and you have to really be wary that a recession is coming. Let's hope it's a little blip. Most people are saying 24, 25, 26, inflation will finally slow down, but how high will the interest rates have to go to make that happen? I mean, economists know much better than I do, but you want to keep a really close eye on that. If you're in any situation where you're going to need to buy or sell personally or professionally or for your business assets, because there's a high risk environment if you're ever forced to sell in the next 2 or 3 years.
That's a good answer. If I can just hog the question for 1 second, because it led into a follow-up I had. You mentioned recession. I couldn't help but think about the NFT slide you showed, and also my crypto portfolio, and how I feel like that's hit its recession already. Do you see trends as far as when you think about a recession affecting that market as well, or do you think that those are two markets that are kind of behaving on their own islands, if you will, and as one goes up, one will dip, and vice versa? Forgive my lack of knowledge on that subject.
Yeah, I mean, I follow it closely, and I have not dipped into the cryptocurrency market. And it's a big deal because a lot of athletes in sport, which is my area, get part of it. And it's kind of the wild west about it. And people thought it was going to be great. And as you know, a lot of people have lost a lot of money recently. But do you ride it out kind of or not? I think the one thing that we do know, and I kind of hinted at this before, is it's coming. So right now it's all kind of sitting outside of regular regulatory monetary processes. So like the US Treasury or the Bank of Canada, or down the list you go. They're not really playing in that world yet, right? Like you're kind of touching on it with value. It's kind of all these other speculators going on. So it's kind of like a pseudo stock market that's sitting out there and what's happening, but there doesn't have the same kind of asset base that a stock does, because you're kind of linked to a company. But now some companies are starting to move in that direction, and some people are getting paid in crypto. So it's kind of going up and down and bouncing around. But then there's the owners underneath are not countries or monetary funds or these kind of organizations you might have a little more trust in. They're private enterprises that are trying to do well. So there's that kind of piece. So that's why I kind of said before, whenever the governmental side of it decides, hey, we need to move to digital currency, or at least adopt digital currency or start a transition towards it, and including it, and there's some things happening already, that's when it's going to get a little more stable. So I'm no investor advisor, but it's a scary one, but risk is tied to reward, right? And if you were in with a decent fund and it's gone down, but you feel like it's going to survive, as everybody always says, you should never pull out when it's at the bottom. But that's the big thing for me, is when more formalized entities decide that digital currencies and cryptocurrencies are something they're going to value, and that's going to really, then it will explode, right? But when will that happen? That's the big question. And what will the right, avenues be? Will these existing ones just then disappear, or will they actually be adopted? It's hard to imagine the U.S. Treasury or government partnering with a private sector investment fund that started but I don't know, right? So I don't know if anyone else has comments on that or knows more than I do, but it's like it's something to keep your eye on very closely.
Great, thank you. And we had a quick follow up in the chat from Robert about sort of the technology behind blockchain in general, and it kind of also ties in, I guess, to the NFT part. I know you sort of mentioned about the government getting involved, but as far as if you have any thoughts on that, Norm.
Yeah, no, great. I see the question. And no, nothing that I've seen in terms of any kind of regulation. It's been very much looking at it like it's an investment that's external to what we're doing, and it's between you and the organization you buy from. They're certainly watching it to make sure that people are treated fairly and those regulatory, but nothing new to say that, hey, we're going to move this into any other investment. So the best analogy that people say, people that know this much better than I do, is to think about buying art. Like it's that kind of world. Like it's looking at it, protecting, making sure people are doing things properly. That if you do make some money, you have to pay tax on it. Like all of those kind of things, like with any investment, but nothing special or unique yet has been put forward from what I've seen. So I think it's a great question, but that's the $1 million question, really, right? Is when does this become a formal channel that everyone's more comfortable in using? Like you don't question it when you invest in a government bond, or you don't think about it when you put like these kind of risks when you buy stock on the New York Stock Exchange, right? But with crypto, you still have that fear that it could disappear tomorrow, or that unlike a bank, you don't expect, the Bank of America to disappear, but your crypto offerer, you still have that fear that they could just close up shop, and don't have those protections behind them. So that's I think where it's kind of at right now, which also, as we said, there's a negative piece to that, but there's also the positive side if you're investing, or if you're thinking about some kind of partnership with the organization you work with, where that could lead to a huge reward if you're vested in before it happens, right? So it's a tricky one. Connor's in, I'm out so far, so you can ask him the same question and see what he thinks. So. What do you think?
I don't know. I'm asking Reddit the same questions every night, so seeing if I can't roll the good old Reddit.
But if you have a little bit of money that you don't need, and it could be a risk reward one that could really pay off, right? As long as you don't need it for a while.
Yeah, exactly. Do we have any other questions from the pool of guests about anything Dean O'Reilly's mentioned already?
All right.
Well, I did have one more, which was if you had to pick, we limited you to 4 tonight. We were cruel. We said you've got to bring 4 business trends to the table to talk about. But if you were asked to bring a 5th to the table, that's maybe sort of coming, or that you wish you could have squeezed into tonight, is there anything that you can think of that you would definitely add as something to consider?
Oh my God, yeah, there's lots. But I highlighted a few up front. But I think one thing that's very interesting to me, which would be a kind of a derivative of a bit of this work from home one, but is where people are like doing their entertainment and physical activity kind of things. And so we've seen a really interesting dynamic when you think about, and I'll look at like the outdoor industry kind of view of the world, and if you think about apparel and those kind of things. So if you look at it's quite interesting. So during COVID, and this is very similar in the US and Canada, the UK, Australia, there was this initial kind of burst of people finding ways to stay active at home. And this could lead to like home gyms and purchase of apparel, those kind of things. And then this massive decline. So people got about as unhealthy as we've been in these countries, probably as ever, right? So there's this little core group that were doing push-ups on their balcony and running up and down the stairs. But most people got very lazy, right? And why not? You're depressed, you're down, you can't go to work, if you're single living in a city, you can't even go on a date. Like all of these things are really challenging for people. What's neat is it's come back. So not exactly back, but if you look at the level of Americans and their physical activity and youth, it's almost back to where it was pre-COVID, but it had been on a declining line anyways, like a gradual decline. So it's kind of back to where you might have expected it would be. So we're dealing with that a lot. I'm involved with a lot of organizations that care about physical activity and youth, and that's a huge challenge overall. But it's kind of come back, but it's come back in a completely different way. So people are much more interested now in working out at home. in their neighborhood. So if you look at the sales of like, any kind of home bike or treadmill or gym, or it's exploded. Things that have video, coaching, like a Peloton, right? Or a Zwift, exploded. These organizations have made fortunes and done brilliant things. So people aren't going back. Like downtown gyms, 24-hour gyms are struggling, right? A lot of them have disappeared. The usage of parks downtown has really shifted. People have stopped doing active transportation. And this has really hurt. Some people, their only physical activity was I bike to work, I walk to work, I walk to the subway. Those have disappeared. So if you put the health thing to aside for a second, because that's obviously a big issue. But you look at it from a business lens, there's a huge decrease in a bunch of things where it was like work related. So it's something I can do on my way home. It's a club I can do at lunch. Part of that first one, those have declined, if not gone. And then there's this really interesting increase in opportunities at home, near home, that people want to do to kind of stay active and fit and keep their weight down and all those kind of pieces. The technologies that allow you to do that on your wrist or whoever's developing from there. That to me is another one, Connor, that's obviously very close to me. That's very interesting that we build into the big ones. And if I could add a sixth one, just to seal a couple minutes, is this, and these numbers are mind blowing, but I didn't include it tonight because I'm not really sure. I don't think most people, if it's going to continue or not. But on average during COVID, 4 million, and up until the last data that the US Labor Board has put out was June. So right up to June of 2022, an average of 4 million Americans were exiting the workforce, full-time jobs, not to retire. This is unheard of, right? Before it would be like hundreds of thousands. And this is this idea that people are, I mentioned a little bit up front, that people are just, they don't want that same level of commitment. Money's not as important. I'd rather live in Maine than in a suburb of Boston, and I'll keep my job part-time in Maine. And this has driven just an extraordinary, now we're seeing, okay, has it stopped? Has everybody that wanted that, the pandemic pushed them to do that, and now we're kind of stable? Or is this going to continue? So everyone's kind of waiting for the next US labor statistics report to kind of come out so we can see. But that has had just an extraordinary effect on the overall economy and the value of real estate and in areas that people never thought would be, people have multiple bidders for, and people are flocking to places like Maine, but continuing to work remotely or working less. So that kind of concurrent, they call them, jobs, where you're not a full-time employee, you're doing some consulting, you're doing some different things, you have more control of your life, is really an interesting trend. And some came in and out, but if you look at that 18-month period, 4 times 18, right? 72 million Americans made that decision. It's extraordinary, right? It's extraordinary, that impact on how work is done. So that's another, and you can go on. Like it's a crazy time. Like it really is a crazy time right now.